Right, everyone, we're going to get started in just a few minutes. We're just waiting for some people to connect. So just hang in there for just a few more minutes. All right, Jason, if you want to start while we're waiting for the last few people to load, that would be great.
Fantastic. Well, thank you, Rebecca. Thank you all for joining us. And thank you for Robert and the Apopka Chamber partnering with the Seminole County Chamber to bring you some more resources on what's going on with our federal relief that we're trying to do, both with Paycheck Protection and the EIDL. Joining us today, we have two of our partners at the GrayRobinson law firm. We've got Chris Dawson and Deborah Fleur, who are going to help walk us through presentation-wise where we are today. All this information is changing. I want to encourage all of you to both utilize the chat section as well as get us any questions if you want to do that by email or text to whoever you know up here that's hosting. We'll be sure that we get all of those out there to encourage that. With that, I want to give Robert a chance to say hi on behalf of the Apopka Chamber. Robert?
Well, thank you very much, Jason, and we really appreciate the partnership on working together. Information is powerful right now, and making sure that we inform our memberships. We know that there's a lot of economics that cross both Apopka and Seminole County, and so we appreciate your partnership and working together so that we can educate our members and making sure that we answer all the questions that maybe you or I don't know the answers to. And so we bring the experts in. And we're excited with GrayRobinson being a partner for both of our organizations, and Chris serving on our board of directors, and Deborah serving on yours. So it's a great cross-pollination there, so we can bring everyone together to educate our community. So thank you very much for the opportunity today. I don't want to take any more time. I'm going to turn it over to Chris and to Deborah to go ahead and get started.
All right. Well, thank you very much for having us today. Again, Chris Dawson with GrayRobinson. I want to introduce my partner, Deborah Fleur, also with our team here in Orlando. And we're excited to be with you all today. Looking out the window, it looks like there's actually a little rain on the horizon too, which is a welcome sight, both for my lawn and just for a change of pace here as we all stay safer at home. But with that, Deb, I'll hand it over to you first if you want to kick us off, or I'm happy to go into to the CARES Act, whichever you prefer.
I can start off. Hi, everybody. It's Deborah Fleur, and I'm going to talk about the Families First Coronavirus Response Act, and specifically the Emergency Medical Leave Expansion Act and the Emergency Paid Sick Leave Act, and just kind of go over a brief overview of that. There's been consistently constant updates and different changes to it with the Department of Labor. They've continued to update the actual act. So there have been some changes that actually conflict with the regulations that came out, that also then conflict with the statute. Overall, what I'm going to call the FFCRA applies to public agencies with one or more employees, or to private employers, including religious organizations and nonprofits that employ less than 500 employees. The Emergency Family Medical Leave Expansion Act, what that does is it provides an employee who's an eligible employee, which is somebody that has worked for the employer 30 days prior to the request of leave. There is some qualifiers in that, as if the person was laid off and then rehired, then that intermittent time after March 1st would not be included in that, so that it would go backwards, so they would be actually considered employed for 30 days. They are entitled up to 12 weeks of emergency paid leave, of which 10 are compensable if you paid for, and the first 10 days are not under that law, but I can go over that a little bit more later. It is for somebody who's in a situation where they are unable to telework for their employer due to a need to leave to take care of their child, who's a minor child under the age of 18, unless it's a child that's over 18 with a disability, and that child's daycare or school is closed. And it has to be closed as a result of a public health emergency, which under this act is the COVID-19. So if it's because, they're on spring break, or at this time of year, we're getting towards summer break, and that doesn't work. If it's closed because I know in other states, schools were closed because of actually the swine flu. Well, that wouldn't fall underneath this. So it's got to be related to COVID for them to be qualified for this type of leave. If they need this leave, they would be entitled up to 2/3 of their regular rate of pay, up to a maximum of $200 per day. And then there is, and this might be more if somebody wants to have a question about it, but there are ways where an employee can get up to 14 weeks of leave, not just 12 weeks of leave. The one thing that's important to remember is if that you're an employer who's already covered under the Family Medical Leave Act, the employee is only entitled to a 12 weeks of FMLA, including the Emergency Family Medical Leave Act, for an entire 12-month period. So what this does is there's a lot of employers who are under the 50 person qualifier of a covered employer that now would be covered under the Emergency Paid Leave Act. But if you've had an employee, for example, that has been out for leave under the Family Medical Leave Act for another disability or another issue, let's say they've had, they had a surgery and they were out for 6 weeks, they would only be entitled to 6 weeks of leave under this Emergency Family Medical Leave Act within a 12-month period. The next law is the Emergency Paid Sick Leave Act, which applies to all employees. You don't have to have been employed for 30 days. And this provides 2 weeks of paid leave for employees for 6 reasons. The first one is that the employee is subject to a federal, state, or local quarantine or isolation order related to COVID-19. There's been a lot of confusion as to this one because people are assuming that the executive order issued by the governor qualifies underneath that. That is not true. The governor, he issued some question and answers a couple of weeks ago that explained that under title or the section 1 where they talked about individuals who have compromised immune system or who are of the age of 65 or older were to stay at home, that was supposed to be read in conjunction with the other provisions under the executive order that those individuals, if they work for an essential business or provide essential services, they can report to work. In addition, it's not considered as technically an isolation or self-quarantine because this law applies to the employee, not generally to the employer. So there are, in other states in the country, there are people who are being told they must stay at home. They are not allowed to leave their home for any reason. There's also, even within this state, there's been like certain healthcare providers who have, if they had gone to an airport, they were required to stay at home for 14 days. Those individuals may be qualified underneath this Emergency Paid Sick Leave Act. But the general executive order by the governor, or like with Seminole County or Orange County's orders, those would not fall underneath this category. The second category for Emergency Paid Sick Leave Act is if an employee has been advised by a healthcare provider to self-quarantine due to concerns related to COVID-19. So it has to be somebody related to COVID-19. It can't be just that, oh, this person, we feel, I can give you an example. I have somebody who is pregnant and they feel that they should stay home, but it wasn't related to COVID-19. If the healthcare provider says it's related to COVID-19, then they would be entitled to the 2 weeks of leave. The third one is if the employees experience symptoms of COVID-19 and seeking a medical diagnosis. This does not cover an employee who says, you know what, I'm experiencing COVID-19, and then they go home and then they don't go seek a medical diagnosis. They just quarantine themselves for 14 days and never get a medical diagnosis. Then they would not be entitled to the 2 weeks of paid leave. So so they need to be seeking a medical diagnosis from a healthcare provider. The fourth reason is the employee is caring for an individual who is subject to one of the isolation or self-quarantine orders, or is experiencing symptoms. Who has either the self-quarantine or health or isolation order, or has been informed by a healthcare provider that they should stay home because of concerns related to COVID-19. The fifth reason is the same as related to the Emergency Family Medical Leave Act, which is caring for a son or a daughter, again, who they have to stay home to take care of this son or daughter because the son or daughter's school or daycare is closed related to reasons of COVID-19. And then the sixth reason is that the employee is experiencing any other substantially similar condition. The Department of Labor still has not defined that. So if somebody comes to you right now, there is no coverage underneath number 6. They have not given us another definition of what is considered substantially similar. So if somebody comes to you and says they have a flu, or I've had people where they've been diagnosed with strep throat, so they think that they should self-quarantine and therefore they should be entitled to the paid sick leave act, that they are not covered underneath this act. Now, whether you want to give them paid leave, that would be your choice as an employer, but you would not be entitled to a tax credit. So the reason this is important is because you are entitled to certain tax credits as an employer. The first 3 reasons I want to let you know above, where I talked about related to whether an employee is experiencing the symptoms of COVID-19 and getting a medical diagnosis, or is been advised by a healthcare provider to self-quarantine due to reasons of COVID-19, or is subject to a federal, state, or local quarantine or isolation order, they will be entitled to the regular rate of pay up to $511 a day for that 2-week period. The next 3 reasons, they are entitled up to 2/3 of their regular rate of pay, or the maximum of $200 per day. So if you as an employer decide to pay more than that, you are only entitled to the tax credit up to those dollars amounts. Something important to realize, there a couple weeks ago, I don't remember the date exactly, but there was a notice provided for employers that they must post. So even if you have employees working that are teleworking from home, you need to provide them with this notice. You need to email it to them. If you have some employees working in the job site and some employees working at home, you need to have it posted in a conspicuous place, which I would suggest where you normally post all of your other, like workers' comp posters, any of your other employment law posters. And then if you have anybody, post it on your website, but I would also email it to your employees just to make sure that they do have it. This law went into effect April 1st. Basically, the Department of Labor said that you need to be in compliance, but they're going to start enforcing it as of April 17th. So as of April 17th, you need to have your ducks in a row. Another thing that's important to note is the Department of Labor has changed their guidance on this several times, but the latest and greatest is that basically as an employer, if you have somebody that's requesting leave under the Emergency Family Medical Leave Act or the Emergency Paid Sick Leave Act, you have to ask for certain information, and you need to keep a record of it for IRS purposes for your tax credits, but you cannot demand or require documentation. And the reason, what it does say in the DOL guidance, it says that you need to look to see if there's any documentation required by the IRS. Well, at this time, again, this could change, but as of today's date, the IRS is not requiring any specific documentation to support your record keeping of the request for leave. And I can go over, there is specific information that you must obtain from an employee for each type of leave that they're requesting, depending on whether it's because take care of a child or if it's related to an isolation order. You need to obtain certain information, but what I would advise as an employer is to have a form, have them check off boxes where they can fill out what the information is as to why they're requesting the leave. The Department of Labor has issued guidance and lays it out very specifically as to the information that you are allowed to ask and seek from an employee at this time. Another important thing to note is healthcare providers, or employers of healthcare providers and emergency responders can exempt their healthcare providers from this law. And I've already gotten a lot of employers who have employees that are pushing back on that because they will fall underneath the general law that they're entitled to leave, and they don't understand why that their employer can say, no, we've decided to opt out, and you as a healthcare provider must continue to report to work. Again, there's a lengthy definition that's been recently provided in the Department of Labor guidance that has outlined who's considered a healthcare provider and who's considered an emergency responder. So even like, for example, some of your government entities, they will have a lot of employees who are not emergency responders. Somebody who's a receptionist, they would not be, technically covered as an emergency responder, but yet their firemen and policemen would be. If you're an assisted living facility or a hospital, any employee that's working for like your assisted living facility, or that is working for a healthcare, that is working for a hospital, for example, is considered a healthcare provider. And so therefore all of their employees, even a receptionist, would be exempt from being able to take leave under this law if the employer chooses to opt out of it. There is also if you are an employer with under 50 employees, you may be allowed to exempt yourself from coverage under the Emergency Family Medical Leave Act, or Emergency Family Medical Leave Expansion Act, and for that same basis under the Emergency Paid Sick Leave Act, but you are not exempt for the other 5 reasons under the Emergency Paid Sick Leave Act. So basically, if you're under 50 employees, if you meet certain criteria, you may be able to be eligible to be exempt from allowing or requiring an employee to take leave underneath the Emergency Family Medical Leave Act or under the Emergency Paid Sick Leave Act. And that is the general overview. There's a lot, usually it's the nuances. When I'm getting questions from clients, it's typically, it's the nuances about how do we handle compensation during that. Can you require an employee to take paid leave if they're taking emergency paid sick leave? Yes, you can. Can you require them to take their paid leave and supplement their Emergency Paid Sick Leave Act? No, you cannot. So those are some of the nuances that the Department of Labor has provided guidance on. And it really, it's something that we have to stay up to date, because literally, I think it was within 4 or 5 day period, we changed our forms requesting information 3 times, because that's how much the Department of Labor guidance has changed. So you just want to make sure you're in constant compliance. One thing we do is we're down at our firm is I'm either myself or one of my partners, we're downloading the Department of Labor guidance basically on a daily basis, so that those employers who have had forms completed by employees prior to the change, we have proof that when they asked for the information, they were in compliance with the law at that time. Again, though, I don't expect them to be extremely, to enforce it really until the 17th, which is when they can enforce it. But I do want you to be aware. I'm not the thing is, you as an employer needs to be concerned about is not just about the Department of Labor coming into your doorway, but it's more your plaintiff's lawyers. We've already had plaintiff's lawyers, they've been contacted by employees where they feel that they're entitled to leave underneath the acts and they've been denied leave. And so they're contacting, Morgan & Morgan has already been very busy. They've informed us. So I'll leave it up to you now, Chris.
All right, thanks, Deb. I'm going to pivot a little bit and talk now about some of the components of the CARES Act, particularly the Paycheck Protection Program, which you've probably heard a lot about. But first, I'll take the act generally, the CARES Act, of course, being the Coronavirus Aid, Relief, and Economic Security Act. This was the major stimulus bill passed by Congress on March 27th. It was signed by President Trump on March 28th, and it was a $2 trillion package. That's trillion with a T. So some major components of that legislation were, of course, the Paycheck Protection Program. That was $349 billion, and I'm going to go into that program specifically in more detail as it is aimed at helping small businesses keep employees on the payroll. But just to rattle off a couple of the other major provisions that you've probably heard about or that you will hear about, there was a $500 billion Treasury Exchange Stabilization Fund. That's going to be a bailout of sorts administered through the Treasury Department for some of the bigger industries that's focused on things like airlines and major government entities that are going to have substantial economic shortfalls. In that was the $25 billion for the airline industry. You probably saw some news this week. They've hammered out a deal, at least in theory, on how the airlines are going to draw down that stimulus. $17 billion for businesses critical to national security, $4 billion for the cargo industry. One notable exception, and of course, sometimes what's not in the bill is also interesting from a political standpoint, $0 for the cruise industry. And so for those of us watching this from Florida, of course, that's a big political issue. The cruise lines have chosen to, in many cases, or in most cases, domicile outside of the U.S. And so at least in the first round, they were not included in the economic stimulus under the CARES Act. A third component that you're probably very familiar with is the direct payment to taxpayers. That's the $1,200 per individual, $2,400 per couple, $500 per child. Those checks or digital payments are starting to go out this week, and the Treasury expects to have 80 million of those out by the end of this week. And then finally, an extension and additional unemployment benefits, and that was the additional $600 per person per week for those receiving unemployment on top of what they're receiving through their state unemployment or reemployment programs. It also extends those benefits through July 31st of this year. And it extends federal unemployment assistance generally up to 39 weeks. So those are the major components of the CARES Act. Like I said, the Paycheck Protection Program has really been the highlight for small businesses, $349 billion, but that is going quickly. And so let's dive right into the Paycheck Protection Program and talk a little bit more about what's available there to help businesses. As I mentioned, the purpose of that program is to benefit employees. It's to keep people on payroll. And so everything about this program is structured around that premise. Eligibility, typically 500 employees or less. That was in the legislation. As you've heard Deb mention a couple of times, the guidance coming out of federal agencies, in this case the SBA, hasn't always matched the federal legislation. It has changed multiple times as well on the Paycheck Protection Program. And so a good caveat, I think, for both of us to give you is make sure you're working with your professionals, your attorney, your CPA, your banker, to make sure that you're up to date on the most current requirements and qualifications for these programs, because it is literally changing by the day, by the hour. So typically, though, 500 employees. There are some exceptions that have been made in guidance issued by SBA for different industries. Based on your industry code, there may be a revenue cap as well that applies to that eligibility. But generally, again, targeted at small businesses. Next, let's talk about the loan amount. The loan that you are eligible to receive if you're a qualifying business, 2.5 times the monthly average payroll cost for your business. So whatever your monthly average has been over the last 12 months, multiply that by 2.5, and that gives you your maximum loan, subject to a $10 million cap. So no loan can exceed $10 million. So again, the higher of either 2.5 times your average or the $10 million cap. The 12 months has been something of contention a little bit, and there has been some guidance on that. Initially, the legislation contemplated just the last 12 months on the calendar. Since then, SBA's revised the guidance to allow either the last 12 months on the calendar or the entirety of the 2019 reporting year. So you can use either one of those, whichever more closely aligns to your current position or your position going into the COVID-19 crisis, to determine how much of the loan you can use. Again, supposed to be used for payroll and related expenses. There are some allowances to also use portions of this loan for things like rent, things like utilities, debt service to keep your business operational. But we'll talk about the payback or the loan forgiveness provision in a minute, and what you spend the money on can impact that. When you get the loan, again, to pay payroll, it's good for 8 weeks. Lenders are any of your typical lenders, government insured lenders are all eligible. And so if you have a good working relationship that's the best place to start. They know your business best, and they can help you navigate some of these waters. Quickly, as far as what type of employees, independent contractors and whether or not they count in your employee counts has been a sticking point, and the feds have finally issued guidance on that to clear up some of the confusion. So you should not count your independent contractors in your employee count when applying for the loan. Independent contractors are now eligible as of April 10th to apply on their own. And so again, you don't want to keep those employees in your count. Let's talk a little bit about affiliate rules as well. When we're talking about the size of the business, questions have come up related to what about franchisees? What if you're in the hospitality space and you're under the Hilton flag? Do you count, or is your employee count counted into Hilton's? The affiliate rules have been waived for certain industries under the Paycheck Protection Program, specifically the ones I mentioned: restaurants, lodging, and then any type of franchise that has a franchise identifier number with the SBA. Those affiliate rules are waived for this program. So each location or each affiliate ID would count in determining whether or not you're eligible. Finally, and the biggest, I think, component of the Paycheck Protection Program, of course, is the forgiveness. If you can get the payroll portions forgiven and the additional 25% as well. So for the forgiveness, 75% of the loan has to be used for payroll costs. The additional 25% can go to those other expenditures, but to qualify for full forgiveness, you have to utilize at least 75% on those payroll costs and expenses. Your employee headcount, it has to be a 1-to-1 retention of employees from the same reporting period last year. So the number of employees you had from February 15th to April 27th, that's the window that the feds have established. You can get forgiveness for full payroll for that number of employees under this program. It doesn't have to be the same employee, full-time equivalent. So if you had one employee working 30 hours a week, it doesn't have to be the same employee, but you can get the loan forgiveness for an employee for 30 hours per week for that person. One last issue that's come up for some guidance and finally gotten some clarification out of the feds, employee leasing. If you use an employee leasing company, are you eligible? The answer that the feds have put out is yes, as long as you have the appropriate documentation from your employee leasing company on those permissible payroll expenses. You can utilize leased employees to qualify for the forgiveness under this program. And again, just to circle back and make sure that I expressed it clearly, the loan forgiveness. So let's say you've taken out a $10 million loan under this program. You've spent $7.5 million on the payroll as required for the forgiveness. The full amount of the loan is forgiven. So the full $10 million is forgiven if you've qualified with that 75%. That's the Paycheck Protection Program. As I said at the beginning, the $349 billion has gone quickly. There are expectations that that the SBA could run out of these funds by the end of this week even. Last week, Congress started to work on a reauthorization to put an additional $250 billion behind this program. To date, they have not been successful in doing that. There is some partisan gamesmanship that has now crept into the conversation, and that is what has thwarted the effort thus far. The U.S. Senate is expected to take up that proposal again tomorrow. And so there may be more funds coming online, but if you are inclined to apply for a loan under this program, run, don't walk to your preferred lender to get that process started. There's a couple more provisions I'll touch on in the CARES Act that are aimed at small businesses, particularly what's called the EIDL program. That was an existing program at the SBA, Economic Injury Disaster Loan Program. But there's a provision under CARES that is attractive for that program. So EIDL grants generally, or excuse me, I shouldn't say grants, EIDL loans generally are up to $2 million working capital loans for small businesses. Any EIDL loan under the CARES Act is a 3.75% APR, 30-year term limit. So there is no loan forgiveness on the EIDL loan, but favorable borrowing terms. These are really best utilized for inventory issues, loss of revenue, things like that, business continuity issues. There is additional component when you apply for an EIDL loan under the CARES program.